All right, guys, welcome to this episode of the Mortgage Wise Radio Show with Randy and Veronica Chambliss. Our goal is to be able to educate and to be able to give expert advice on personal finances, mortgages, and also real estate investing. Now, as a result of what our team and I has done over the years, our team have helped hundreds of first-time home buyers, experienced home buyers, and also real estate investors achieve that goal of home ownership. I'm Randy Chambliss. I'm the executive director of the Louisiana Housing Authority and also a branch mortgage manager with Geneva Financial. And I have to my right.
I am Veronica Chambliss, and I am also, I'm the Director of Housing with Louisiana Housing Authority and a mortgage branch manager, with Geneva Financial as well. And guys, we're so happy to have you join us on our show. Tonight, we're going to be discussing how to purchase a home being self-employed. I mean, this is a hot topic. We get this. I mean, I get questions about being self-employed and qualifying for a mortgage at least 3 to 4 times a week. Yes. So it is like very popular and people just want to know. And that's what we're here for, to serve you guys. So tonight we're going to talk about the number one question is, how much do I have to claim on my taxes to qualify for a mortgage? Number one question. The second thing we're going to cover is, hey, I quit my job. So, hey, can I still purchase a home? I just started a new business. Do I still qualify? And the third thing, guys, we're going to talk about preparation. Why? Because preparation is everything, right?
Absolutely, guys. Preparation is everything.
So we're just going to dive right on in. Back to our first topic is, hey, how much do I have to claim on my taxes to qualify for a mortgage, guys?
Right. And that's a huge question. And at the end of the day, it's possible, number one, to purchase a home when you're self-employed. The challenge is most people, they do take advantage of the tax breaks that's given to entrepreneurs. And you should, right? That's the whole purpose, right?
It's legal.
Absolutely. Because as a W-2 employee, you go to work, then you pay taxes, and then whatever left over, then you spend, right? But on the opposite side, as an entrepreneur, you go to work, you build your business, you spend money on all the items you need to spend on, and then whatever's left over, then you pay taxes on. But oftentimes we find that people don't plan ahead and be prepared, like Veronica mentioned, and they don't have a plan in place. So if you don't plan to have success, then you plan to fail. So you want to be prepared. So we're going to give you some tips and some strategy. If you're an entrepreneur, if you know of an entrepreneur that's looking to purchase a home, then this is going to be critical for their success. So that way they have a good plan in place, right?
Yes. So please like and share. Show us some love. Share this information with your family members on your page so that everybody can get this information, guys.
Absolutely. So listen, number one is having a personal financial plan, right? That's number one. Personal financial plan. So if you take your notes, make sure you write that down. Number one, have a personal financial plan. Now, what's underneath that personal plan? Well, number one, you want to minimize your expenses. Your monthly expenses, you want to minimum as possible. Number two, you want to have your debt as low as possible or eliminate the debts that you may have, right? Three, you want to raise up your credit score as much as you possibly can, right? 620 you could get approved for, 640 is ideal, you get better rates, you get better terms, etc. But you want to be able to raise your credit scores up as high as you can. And also you want to increase your savings, right? You want to make sure you have a savings plan. And as much as that we don't want to hear this B word, I'm going to tell you straight, the B word.
The B word
is the budget, right? You gotta have a budget, or should I be correct and say you should have a budget, right? So you should have that budget in place because this is going to be a major move for you as you're getting ready to grow your business. Is that right, Veronica?
Oh, absolutely. That was one of my words I hated.
Absolutely. So listen, the second thing is I want you guys to really know is there's a couple of ratios that the lender look for, right? We as a lender or your lender, whoever you're working with, can't tell you and say, hey, you need to write off X amount of dollars, you need to pay X amount on taxes. We can't tell you that, right? Every file is different. Every borrower is different. So when they come to us, we have a customized plan for them, a customized financial strategy for them. And everybody varies, right? The personal finances are different. So it's not a cookie cutter loan. It's not a cookie cutter game plan. But at least we're going to give you the ratios, right? The guidelines, the requirements for conventional and the requirements for FHA. So you could really calculate it yourself and go see your CPA or your tax preparer and see if it does it make financial success for you first to do that, right? So listen, let's dive into it. So one of the things you want to look at is your credit report, right? Now, you don't want to pull your credit report just to get your credit scores. You want to pull your credit report to determine exactly how many monthly expenses there is going out of your household, right?
Yeah,
And so that's right. So you want to add up everything on your credit report that's going out as an expense, as a monthly debt payment, right? But we're not talking about your entity bill, your cell phone bill,
your car insurance,
right, your car insurance, life insurance. We're not talking about those types of monthly
or
payments or
some
debts.
people put an extra couple of $100 on their credit card,
Mm,
and that's okay, but we only look at the minimum payment. So if your minimum payment is $25, that's what we count.
absolutely. So
Right.
you want to count that minimum credit card payment, $25. You want to count that car payment that you have. You want to count those type of items. That's on your report. So as you count those things up, you add all of them up and you want to write that down. What was that total, right? And then from that total, you want to make sure that you're looking at your future mortgage payments. There's many mortgage calculators that's out, right, that you can use to be able to calculate, okay, if I have a $150,000 home with X amount percentage for interest rate, what would that principal interest will be?
Right. Might be $1,000 a month. So you take
Right.
that amount into consideration as well.
Right. So just to recap, number one, all your debt payments every month that goes out on your credit report. You add in your future mortgage payment that you're going to be acquiring. And then you're going to take that, you're going to divide that by your monthly gross income. Notice we said gross, right, Brian?
Gross.
Right.
That's the money what before taxes are taken out.
Right. And before your insurances that's taken out, right? Taxes and insurance, that's your gross, right? And so what that's going to do when you do that calculation, you add all those things up, you divide it by your monthly gross income, and that gives you this percentage, right?
So for self-employed people, we look at, I know a lot of people have gross sales and things like that, and then you have a net income, a bottom line. So we look at your net for self-employed. So we look at the last maybe 1 or 2 years, because in some instances you just need 1 year tax return, and in some you need 2 years of tax returns. So we look at that bottom line. Then we also go back in to see what we can add back in. It might be depreciation. That's like what they call it, invisible money, or money that wasn't actually
Correct.
spent. But we add that back to give you credit to your income. So if you have maybe a trucking company and your depreciation on your truck is on your tax returns, and we take whatever that number is and add it to that net number. Then we look at the previous year, do the same thing. We add those two numbers together and divide it by 24. Why? 24 months. And that will be your average income. So you take that number, Randy.
Yeah. And so at the end of the day, now you have that percentage, that rate, right? So for FHA loan, you're going to go with FHA product, then the max is going to be about 50%, 50%. For a conventional loan, that max back-end ratio is going to be about 43%, right? And so now you can run those numbers yourself, right? You can run those numbers yourself and you say, okay, I'm buying a $225,000 home. I got my mortgage calculated. I know what my principal interest is going to be. I know what all that's going to be. I have my credit report, I have all my expenses going out. I divided that by my gross income. So now at this point, like Veronica just mentioned, now at the point you have that percentage. Now you could go to your CPA and say, listen, I need to show X amount of dollars in income for me to be in this percentage, this ratio that I calculated. Now that could be, $50,000 you showing on your taxes that you're paying taxes on. That might be $30,000. That might be $150,000. We don't know. We can't tell you that.
Everybody is different. So we don't know, but that is definitely a conversation to have with your tax preparer or your CPA so that they can know your goals, whether you're looking to purchase a home this year. So for 2020, hey, I need to show more income because I want to purchase a home this year. Or your goal may be to purchase a home next year. Have that conversation this year so that you can
Absolutely.
be prepared. And you want to ask your tax advisor or your CPA, hey, how can I minimize my tax liability without taking an adverse action on
Mm,
my financial
yes.
picture? That is the major question. So you want to have that conversation with your CPA because they know your overall personal finances. We don't. So we can't say, oh, you need to claim 80,000. We can't.
Right. Because at the end of the day, it's there to protect you, right? You may not be able to afford that home. And so the worst thing that you want to do is, get in the home, you can't afford it, and then you end up taking a foreclosure because you couldn't afford the payment. And that's what these ratios are
Absolutely.
for, to determine your income versus your debts and if you can afford it,
To
right?
see if you have the capacity to afford it. Exactly.
Absolutely.
That's right.
In the banking world, we call it being bankable. Like, are you bankable right now?
Mhm.
And if you're not bankable right now, now we're giving you the exact plan and blueprint to get to be bankable. So that's the back end ratio. So now we're going to talk about the front end ratio, and that's called the housing ratio, just to make sure you can afford your housing payment. So what you want to look at is the housing payment, and you want to divide it, whatever the housing payment is, you want to divide that by your monthly gross
And
income.
when he say housing payment, that would be your new mortgage payment.
Yes,
Okay.
exactly. Not the rent that you're paying right now, right?
Right.
If you're living with mom and them, not that one, but it's
Mhm.
actually your future mortgage payment. That gives you that ratio, right? So those type of things, guys, that you want to know and have good notes to take,
Right.
because now you'll be able to do the third thing that Veronica mentioned that we're going to talk about is preparation. So now we're going to
Mhm.
go to the second one. What's that
Well,
second
just to add to that really quick,
one?
I wanted to say that people don't know that as a lender, we look at two different ratios. So everybody always say, "Oh, my debt to income ratio," but like Randy said, we look at the housing ratio as well. That's the front end ratio, and your total debt ratio is the back end ratio. So just to give you a little added education in that area, that's all. So the second topic is, hey, I quit my job to start a new business.
Mm,
And a lot of that has been going on for 2020, being that we're in a global pandemic. And I mean, that is a good decision to
yeah,
make. However, if you want to purchase a home, you have to wait at least 2 years so that you can have your income on paper.
tax returns.
Right, because why? A lender does not know how your new business is going to perform. Like, for example, we were in the solar panel industry a few years ago when it was hot. Well, we thought that industry was going to be around for at least 25 years or so. And guess what? It didn't last, but what, 2 years, two and a
Uh,
half years?
it was about that. I remember watching a Super Bowl commercial, and he had a certain gentleman that was in New Orleans was standing on top of a house, standing on solar panels, right? And
Right.
it was some years ago, as I think about it, and all of a sudden became popular, right? And
It
we
was
built up
popular.
a huge sales team. We had like over 75 sales people in our sales team. It was good times,
Right,
but
because at that time they have federal
yes,
tax incentives and state tax incentives, and we thought, hey, it was going to be around
a
for a long
long time,
time, but
right?
it didn't last as long as we thought it was, and that's the reason why the lender want to see how your new business is going to perform before they guarantee you a mortgage for the next 30 years. They want to make sure you're going to be okay as well. Like Randy said, you're not ending up in foreclosure. And then also the investors, meaning the lender that's lending you the money, isn't taking a loss on their bottom line as well. Right?
Absolutely. And it just makes common sense. At the end of the day, you got cousin Boo Boo coming over to you saying, listen, I want to borrow $10,000. And Boo Boo haven't had a grass cutting business in the last 3 months because it's wintertime, right? You might not want to consider giving him $10,000 unless you actually going to do just that, have the mindset that you're going to give it to him. You're not expecting it back, right?
Yep.
So you
And
just want to be bankable.
yep. And then vice versa. Some people they go from being self-employed to being a W-2 employee. Can they
Mhm.
still buy a home? Yes, you can. Because if you are coming from being self-employed, 1099, you still have a work history. As long as you can prove it on paper, because we're
Yes.
going to ask for the tax returns to prove it on paper. And you become a W-2 employee, we can use your new salary. All
Yes.
right.
Awesome.
So The third thing is preparation.
Oh yeah, preparation. That's a big, big topic. I kind of alluded to it earlier, and that's having that personal financial plan in place, right? That's two financial objectives that we all want to accomplish. Number one, we want to be able to live our current lifestyle, free, right? We want to have enough money coming in month after month, and have enough money to pay all our expenses, have money left over so we could go do some fun things and create memorable experiences, right? That's what we want.
Absolutely.
Then also the second financial goal is your future income. Like at some point you want to retire, like you don't want to work for the rest of your life, so you want to have a retirement income, some cash flow coming in, so you'll never have to work again. But there's four challenges that we have to understand and know that we have to overcome. Number one is taxes, right? We just alluded to a lot of about taxes, right?
Certainly.
Number two is going to be debt. Number three is going to be credit. And then number four is consumer spending, right? So let's back up. Taxes is a big thing. When you're if you're a W-2 employee, then that means you're getting probably taxed between 28 and 33%, right, for your taxes. But as a self-employed person, you could be anywhere between 18% and 23%. That's why so many people run towards self-employed, because the tax liabilities are so different, right? And if you're a real estate investor or just an investor, period, sometimes your tax liability could be zero, right? Believe it or not, zero to about 15%, right? And so now those taxes that's you paying taxes on, you also, when you get that paycheck or you get your cash flow coming in, you go to the store, you buy some butter, buy some bread because the spouse say, hey, babe, can you pick up some food on the way home? Gotcha. So now you go to that store and guess what you're doing? You paying taxes on the food, right? Then you may stop at the gas station and get some gas because you need some gas for the vehicle. And guess what? You taxed again, right? So we are always being taxed. So at the end of the day, taxes take almost like a third of people paychecks, income, take about a third. So you have to know that, you have to understand that, and you have to have a game plan to get around it. And number two is debt. People don't realize that oftentimes taxes actually create more debt. And the reason why, like Veronica mentioned it earlier, that we lend based on gross income, right? So if you go and buy a vehicle, most likely that bank gonna ask you for your gross income. You W-2 employee, you come in to buy a home, what's your gross income? But you're not bringing it home gross. You're bringing home maybe $35,000 after taxes. But your whole lifestyle is built on $50,000 lifestyle. You're only bringing home $35,000. So that gap right there, for you to continue month after month, most people use their credit cards to bridge that gap. And it catches up with them over time. And then if you have a low credit score, I mean, your interest rate is higher, and that's how debt is created, right?
Mm-hmm.
And then also consumer spending. We got to make sure that our consumer spending is low. We discipline, we have our goal, we want to purchase the house, and always raising up those credit scores. So, just having that game plan in place, that personal financial plan, minimizing expenses, minimizing debt or paying off debt, creating extra income, that's going to give you good cash flow. And then ultimately that big B word we mentioned is budget. I know, right? That big word. People don't want to hear that B word. So anything else you want to chime in on being prepared?
No, I think you pretty much covered it.
All right, good deal, good deal. So listen, being prepared, is huge, and that brings us to the next segment of our show. And so what we like to do is always motivate people. We real big on mindset. Having a proper mindset is everything, right? One of the philosophies, one of the principles that we have in our household, we pray a lot. At the end of the day, we believe in the Most High God. We thank Him for everything that He's given us. And at the same time, when we humbly ask in our prayers for what we want, one of the scripture tells us that we have not because we ask not, right? So when we ask very humbly, we act like our prayers is already answered. So today, this week, motivation quote is gonna say, sometimes the longest way to success is the shortcut. I'm gonna say that again. Sometimes the longest way to success is actually the shortcut. Meaning that if you are self-employed, you're an employee, you're an employer, right? You hiring other people, then 1099, then you have to be able to be prepared. It's not an instant thing. It's not a microwave thing. It's just not going to happen unless you just automatically did things right. but you just have to prepare. And that's the purpose of this educational podcasts and radio show that we're doing. We want to arm you with the education, the knowledge, so you can increase your personal financial, increase your mortgage and your real estate investment IQ, right? And so that's what you want to focus on, not so much the shortcut, but how can I get there? What's the plan? Where's the mentor? Follow the mentor. Well, Veronica and I have over 14 years experiences in mortgages and real estate investing. How many years experience you have, Veronica?
Over 10.
Over
Over 10
10.
years.
And so we could definitely get you to the promised land. I just need you to follow the plan. That's the key, right? So next, guys, we want to talk about the next podcast that's coming up every Tuesday, right? Mark this down, right? Every Tuesday at 7 p.m., most high willing, we'll be here live. And every Tuesday, we'll have a different topic, or we might elaborate a little bit more on the previous topic.
Right.
Well, expert guests that's going to be coming on, that's going to be sharing knowledge, sharing their experience. So you want to definitely tune in. If you are a subject matter expert in the real estate field or in the other field, you want to come on the show, just make sure you just reach out to us. You can text us, give us a call, inbox us. We also want to know what questions that you guys may have, what topics that you want to hear about in regards to real estate, personal finances, real estate investing, personal finances, and mortgages. Like, we want to know those topics. We have a whole list of topics,
Right, but we want to hear from you. So we're
Right.
here to serve you. So if it's any question you want to know about with mortgages, a lot of people don't understand the process because they're not educated in that area. And I believe that is our responsibility to put the information out there. So whatever you want to hear, you tell us, and then we'll
Right.
make it happen.
Absolutely. And so, having said that, guys, at the end of the day, we're here to serve, like Veronica mentioned. We mortgage lenders. So if you are in the market of shopping, you see a home that you want, one of the first things you want to do is get pre-qualified, pre-approved, right? You want to talk to that lender. We have a free consultation. We call it a no fee guarantee. We don't charge you for a consultation. We don't even charge you for an application, right? We don't do that. We want to look at your situation, do a quick
Analysis.
analysis, consultation. So we're going to ask you some questions to determine if you're ready to move forward. If you are, then we're going to move forward, give you that game plan. If you're not, then we're going to tell you what you need to do, give you that game plan, and all you have to do is to go execute, right? Execute for 2021. And so that's what we're able to do. If you are a real estate agent, a realtor, a broker, and you have some clients that you need to get to the table, then we're certainly here to serve you as well, because that's a part of this podcast, to be able to help build the brand of our real estate agent partners, to help them to build their businesses, right? And so, having said that, guys, in the last words, Veronica?
Or if you're currently in the market right now and you're with a lender and you're not sure about your fees, what type of loan you have, you can also call us. We'll be what's called a watchdog. We can look at the loan estimate to see if there's any junk fees or if there's any fees that can possibly come off. So you can contact us and we'll look over it for you.
Absolutely. So listen, guys, we're excited. We're building more branches across the country. So, any loan officers, that's really, really good, at least 2 years experience. We here to be able to help serve them as well. So right now we have over 43, we're in 43 different states, over 130 branches, and Veronica and I are building the branches, as we speak right now. So listen, guys, that's it for today. God bless. Enjoy the rest of your night on purpose. Take care.
Thank you, guys.